Yo, what's going on, guys? It's your boy Trillionaire Mac. Welcome back to another video. So in this video, we are going to be discussing how to create a trading plan. And I'm going to kind of walk you guys through I would say a plain version of a possible trading plan that you could use. Now, the trading plan that we do go over, if used correctly, yes, you will be profitable within the market, but you won't be able to be as efficient as possible. I saved that for my mentorship program and my course. All right, so sit back, relax, and let's get into the video. All right, now before we get started, I want you guys to know that everything we're about to cover is going to be posted within the institutional trading course as well. All right, next week I'm going to be releasing a video that is going to basically break down my exact trading plan to the T. All right, for those of you that ask me, how do I get 2 pip stop losses? How do I consistently, post my entries on Instagram and have them, be 2 to 5 pips, things like that for my stop loss. Right. So if you guys are interested in that, click the first link in the description. Go check out the institutional trading course. As you guys know, this is my first supply and demand institutional. Scratch that. So let's get right into it. So how to create a trading plan. Now, my trading plans are very, very simple, very, very straightforward, but I'm going to give you guys a generic model for a trading plan. Now, first, you have to understand time frames. All right. I want you guys to choose one macro time frame. Okay, and then one micro time frame. Right? Now, these time frames, I'm going to show you how to properly correlate different time frames together. Okay, but just for an example, okay, you could have a macro time frame of the daily, and you could have a micro time frame of the H1. Right? Now, why is this important? When you are trading supply and demand, this is exactly how simple your trading plan should be. It should simply be, are you in a higher time frame macro zone? And if so, do you have a micro time frame entry shown present, right? That's pretty much it. So let's talk about our macro time frame really quickly. Okay, what is your criteria as it relates, since you guys are watching this, okay, you should be a supply and demand trader, institutional trading, liquidity trader, something like that. All right, our trading plan is going to revolve around that. Let me actually put that. I don't want to confuse anyone. We do not trade retail trading patterns over here, straight institution. So we'll say possible institutional trading plan. Okay, now remember, this is not going to be too in-depth. If you guys do want an in-depth example, feel free to click the first link in the description. Go check out the institutional trading course. Make sure you guys use YouTube 20 for 20% off. Okay, we have 1 day, 19 hours left before this coupon code is dead, so please, please, please use it up. A lot of you guys have already done so. I'm just waiting for you guys to finish the course fully and leave a review for me, all right? I really want to know you all's opinions on the course itself. What type of more advanced content you guys want me to focus on. I've gotten a lot of questions about supply and demand flips. I've gotten a lot of questions about liquidity, POIs, so we're going to go into all of that within the more advanced section of the course, chapter 10. All right. So what do you want your macro time frame to do? All right. What type of zone do you want it to create as an institutional trader? Let's cancel that. Okay. Right. So if you guys have checked out previous videos of how I select order blocks, okay, that is what you want to apply in order to select what order block you want to use on your macro time frame. So what am I going to do first? I'm going to find a macro time frame order block. Okay, something that is responsible for breaking structure, last buy before the sell, last sell before the buy, somewhere where supply / demand comes into the market. Also, we want some imbalance or inefficiency to also be created, right? So that is what you're going to be looking for on your daily time frame, okay, on your macro time frame. Now, let's actually find some examples of this here. Okay, so if we go to the daily time frame on USD or GBP, JPY, excuse me, guys, we can see that. Let's find an order block. All right, let's find a really good example of an order block. Okay, so I would use this here. All right, this inside bar here is fantastic. If we're not using the inside bar, our entire range would be this last buy before the sell takes place. Do we break structure? Absolutely, we break minor structure here. Now, we don't necessarily, let me show you guys. So we did break minor structure here, okay? So we don't necessarily break this structure down here, but it's okay, right? We're responsible for breaking minor structure. This is on the daily time frame, so price can definitely react when it comes back to this area, as you guys see it did here. All right, and we actually took advantage of this trade a couple of weeks ago within, let me see, September 15th. Yeah, a couple of weeks ago within the Telegram channel. As you guys can see, I kind of have this marked up already. So this here would be an order block. So do we break structure? Absolutely. Did supplier demand come into the market? Absolutely. What's our next, did we create imbalance? Do we have imbalance here? Yes, we have imbalance here, we have imbalance here, we have imbalance here. So this here would be a fantastic example of an order block. All right, so macro time frame, we found our order block. Perfect. Now let's move on to our micro time frame. What are you looking for on the micro time frame? All right, now remember, this is what I'm going to give you guys is a generic type of trading plan. You can use this to be profitable. All right, I'm not going to lie to you guys. You can absolutely use this to be profitable within the market. I'm not going to go over how I would actually tell my clients within the Telegram channel to enter. Okay, they kind of have the next tier up as it relates to an entry model within our higher time frame zone. But I will give you guys some type of clue that you can use, and feel free to backtest this yourself. You will, like I said, you will be profitable with it. You will be consistent, very consistent with it. But the only thing about it, you're not going to get those 2 to 5 pip stop losses that you guys are looking for. All right, it's going to be a higher time frame zone. You know, you may get 15 pip stop loss, 20 pip stop loss, 25 pip stop loss. But if you're trading from zone to zone, you should be good. Okay. So what are you looking for on your micro time frame? It's really this simple. Are you at a valid zone? Do you have a valid entry? So I'm going to give you guys some examples. Okay. Now these examples that I'm going to give you, this is just based off of your micro time frame. This is not saying that you're going to the M15. This is not saying you're going to the M5 or the M1. The trading plan that I'm giving you guys as an example has the macro time frame of the daily and the micro time frame of the H1, which means the daily time frame would be your zone and the H1 time frame would be your entry signal. Okay. So an example of this, as you guys know, we can just say a simple bearish engulfing candlestick pattern. Okay. You can see a pin bar candlestick pattern. Okay. Or you can see, I'm trying to think of another one without giving too much sauce out, because I talked a lot about it within the Telegram channel. You know what? Let's use these. Let's just use these candlestick patterns. Now, I know what you guys are saying. Oh, candlestick patterns, you know, this relates to price action. As you guys know, I used to be a price action trader before I decided to switch to institutional style of trading. And I will say, institutional trading, there are certain footprints that are left behind within the candles themselves that we're able to pick up and notice those types of patterns over and over and over again. Now, I'm not a retail trader and I'm no longer a price action trader, but there are still some price action concepts that do assist you with understanding liquidity trading, understanding institutional trading and things like that, right? The two patterns that you can use, I don't personally use these, okay, but I know that they work because I've backtested this for so long. I've traded, you know, institutional trading for so long, and I've helped plenty of people develop a trading pattern or a trading plan, excuse me, that revolves around them, right? So this goes back to when I went to Atlanta, Georgia. Someone paid me to come down there and basically give them a one-on-one session, and they wanted to be more of a swing trader, and this is an example of a trading plan that they use, and they use it to this day. They're very profitable. They only swing trade, and this is something that you guys can use too. So I just wanted to you know, knock this out for you all. So what are we looking for on the micro time frame? Bearish engulfing candlestick pattern or pin bar candlestick pattern. So let's actually go to the H1 time frame, which you guys know I don't use. All right, it's not something that I use at all, and we're going to be looking in this area here. Okay, mainly because we see. So let's change this color let's make this blue here. And we're going to go to the lower time frame and we're going to look at this region here and see how price reacts to our higher time frame zone. All right, so let's go to the hour. All right, so we are here on the H1 time frame of within our higher time frame macro zone here. Okay, this is a valid order block based on the confluences that I gave you all. Okay, breakup structure, supply and demand was put into the market at that point, which created an imbalance, which is responsible for that breakup structure. Okay, should be in that order. So we have now tested into our higher time frame zone, our daily zone, and we are on the H1 time frame. Right now, I'm going to be looking for a bearish candlestick pattern, a bearish pin bar, something like that after we actually tap into the zone. So we tap into the zone here. Okay, we trade into it, and of course, right out the gate, we see a bearish engulfing candlestick pattern here and another bearish engulfing candlestick pattern here. Okay, so let's say you entered after you saw this entry signal. Okay, are we at a valid zone? Yes, we're at a valid higher time frame order block. And do we see our micro H1 entry, valid entry? Do we see a bearish engulfing? Absolutely. Let's say you entered after this first bearish engulfing. Okay, because it's a daily time frame, because it's a daily zone, all right, stop would be somewhere up here. You're only risking 1% of your account per trade, so you'd be risking around 78 pips, right? So as an example of a trading plan that you could possibly use, that's a lot of pips that you're risking, right? But check this out. So if we're targeting this low here, right, which price does trade into, which if you're using this as an example, then of course you should be swing trading. Okay, then we can see that targeting this low here, and price hits for 334.9 pips. Overall 4.27 risk to reward ratio. Now, a 4.27% on a trade, is that decent? Yes, that's decent. It's not the best in the world, especially how long you're holding this. Okay, but like I said, this is just an example for you guys out there who do want to find consistency. All right, you can absolutely use this trading plan to be consistent. It's already been proven. Now, me personally, I don't really like to swing trade all too much. I like to day trade and intraday trade. So I'm more on, I use the H4 as my macro and things like that. And I also take my entries a different type of way as well, which I go over within my course, okay, in order for me to get, 2 to 5 pip stop losses on average, okay, within my entry method video. So I don't take entries like this, okay, but like I said, you guys should be looking for valid zone, valid entries, okay? This is going to help you out a ton. Find a valid order block. That's the first thing you should do. Second thing you should do, find a valid entry model that you like. Now, those of you who are a part of my Trillionaire Mac Trades Telegram channel, I send you guys my higher time frame points of interest, okay? I don't use regular order blocks, as you guys know. I actually add certain confluences on top of it and incorporate liquidity with my order blocks themselves, which I also talk about within the liquidity point of interest here and order block point of interest here. Right, so I basically mix the two together in order to have a high probability point of interest, right? And I also have a certain way that, so I send that into the Telegram channel, right? And then every Sunday we go over within the Telegram channel how to actually take advantage of my trades, and I teach you guys an entry model that you're going to see, I would say 75 to 80% of the time if the trade is going to be successful. Sometimes it's going to miss by 1 to 2 pips. But overall, students are very happy with the profits, especially those of you who set alerts, those clients who, hop on the charts during London session or New York session and simply look for the entry schematic that I give you guys, okay? And that is how, on average, the trades within the Telegram channel will have between 12 and 20 pip stop losses on average, sometimes a little less, sometimes around 10 pips. And then students of mine, I know you guys are hitting 2 to 5 pips on average, 5 pips being the max, all right? So I hope you guys enjoyed this video. If you did, like the video, subscribe to the YouTube channel. I would love to have you guys a part of the family, and hit that bell notification icon to be updated whenever I upload a new video. I'll catch you guys on the next one. I don't want this to be too long, Much love. Peace out. Check out the course.